Alright, problem 6.4, we want to be able to record the transactions in the general journal. In our first transaction, we paid salaries, so the debit is to the expense salary expense, and the credit to cash in bank. Source document is check 310. We wrote a check, so we know we credit cash in bank, and that was for salaries expense, the debit. Transaction on the third, we bought camping equipment on account. So we now have the camping equipment, that's a debit, $2,000, and on account, so we credit the liability, accounts payable, Adventure Equipment Inc. for $2,000. The source document is Adventure Equipment Inc.'s invoice 320. Transaction on the fifth, we received cash. Why do we receive that cash? Because we rented equipment. So we're debiting cash in bank, we received cash in bank, we increase the asset account cash in bank with a debit, and we credit the revenue account equipment rental revenue. The source document is our receipt 150. Okay, transaction on the 7th, paid for our utilities, so that's an expense. We know the expenses have a normal debit balance. We increase the expense, so it's a debit to utilities expense. We wrote a check, source document 310, so we know we credit cash in bank. Source document check 310. Debit utilities expense for $110, credit cash in bank for $110. Transaction on the 11th, we had equipment rental revenue. We did not receive cash, so it was on account. We provided a service, the equipment rental revenue, and our customer, Polk and Company, did not pay cash, so it's on account. Accounts receivable as an asset increases with a debit. We debit accounts receivable, Polk and Company, for $1,700, and we credit the revenue account equipment rental revenue, $1,700. Our sales invoice, $262. Transaction on the 12th, the owner withdrew cash from the business. Ronald Hicks is our owner. We have the withdrawals account. That's an owner's equity account with a normal debit balance. So that increased. We debit Ronald Hicks withdraws $800. He wrote himself a check, so we're crediting cash in bank $800. Source document check 312. Transaction on the 14th is a debit to office equipment and a credit to accounts payable Digital Tech Computers. What happened? We bought office equipment on account. We now physically have the asset, office equipment, so to increase an asset, it's a debit, $300. We're crediting the liability. We didn't pay cash, so we owe Digital Tech Computers $300. We credit or increase the liability, accounts payable Digital Tech Computers $300. Source document is invoice 270. On the 16th, we paid on account. We made payment on account to Adventure Equipment Inc. The accounts payable Adventure Equipment Inc. has a normal credit balance. It increases with a credit and decreases with a debit. So we're paying someone back that we owe money. So we decrease the liability, accounts payable, Venture Equipment Inc., $1,000 debit. We wrote a check, so we credit cash in bank, $1,000. So we know in this transaction that we wrote a check, we're immediately going to credit cash in bank. Why did we write that check? We're making payment on account, decreasing the liability, accounts payable, $1,000. On the 25th, this time we received cash, $1,700. Why did we receive that cash? Because our customer, Polk and Company, paid us back. Accounts receivable has a normal debit balance and increases with a debit, decreases with a credit. So they paid us back, decreasing what is owed. So we decreased the asset account, accounts receivable, $1,700. The debit, cash in bank, increased, $1,700 debit. Credit accounts receivable, Polk and Company, $1,700. Source document, receipt 151. And the transaction on the 30th, we wrote a check. Why did we write that check? Because we are making payment on account. Accounts payable, Digital Tech Computers has a normal credit balance, increases with a credit, decreases with a debit. We're paying someone back, so we're decreasing what is owed to them. Debiting accounts payable, Digital Tech Computers, $300. Crediting cash and bank, $300. I wrote a check. I decreased the asset cash and bank. My source document is $300. My check, $314.